Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, we're getting towards the crunch time on the S&P 500 short. So I wanted to reiterate my buy rating on shorting the S&P 500. And so let's get into it. Just wanted to give you a big picture here and why every time there's a bearish setup, I'm going to be shorting the market because at some point in time, I think it's going to really matter, and I'll be glad that I did short the market. And while my short is right now about 11% of my portfolio, um, that might grow to, I don't know, 14 or 15%. And I do have some equities, things like Exelon and Antero and China and things that kind of have a closer to a negative correlation to the S&P 500. They tend to go up when the market goes down. Um, I'm trying to get a currency recommendation out, but I'll talk about that later. Um, so in 2008, by the way, I was positive up about 5% in 2008, and I plan on doing that again if we get into a real ugly bear market. So this is the long-term picture going all the way back to 1997. And so you can see we had about a 2.5 year negative divergence on the S&P 500, or maybe it was 3 years. Let's see, one, two, it was about 3 years before the 2000 crash, the tech bubble. And then in 2007, we only had like an 11-month negative divergence. And what I mean by that is when prices are hitting higher highs, the relative strength index, which measures the oomph of the move, like the underlying strength. It's a mathematical formula that I'm not going to get into, but they start weakening and it flashes a caution sign, beware, a change of trend is coming. So we had a smaller one in 2007, but if you fast forward to where we're at now, we have a one, two, three, four, five, six, it's 6 to 7 year negative divergence. And, we're hugging the top of our resistance line. And so this is a really great time to be, if you're into that, the big picture is it could be a a really big decline. And if nothing else, it could come down to 4,000, the support line, but it could even be greater than that. So that's big picture stuff on the S&P 500. This is just a weekly. Here, let me go back to give you some context. So we're just going to look at the last few years, last couple of years here. And so here we are. Here was the bullish channel. We broke out of that and we're, showing us that we were overbought. We were getting a negative divergence also on the weekly chart, flashing a caution sign, be careful, change of trend is coming. And then I got bearish back in January. It's on the daily chart, which I'm going to show you next. And so here we are, we're coming back up right into a weekly bearish rainbow convergence. So the longer the chart, the more impact and the more weighting it has in making decisions for me. So right now we're hitting our head on that. And of course, this is a weekly chart, so we need weekly closes on this to verify if prices could get through on the upside. I got my stop a little bit above that, 5,800, give it a little bit of room. This trade has still been profitable, so that's okay. So that's the weekly outlook. I got 5,700. I'm sorry, my stop is 5,800. I will change that on the next call. So now we're going to look at the daily. We're just going to look at the downturn and then the up move. And here we are. So went bearish back in January, went neutral in March, went bearish again, the middle of March, came all the way down here, went neutral in the beginning of April, went bullish a couple days later, went bearish too early, but that's okay. Still better than just holding the short. Made a little extra money there. And so you can see on the daily chart, we're getting ready for a positive rainbow, a bullish rainbow convergence. So what will happen when these lines meet, prices will pause or they'll slow down, and that would be a type 1 convergence until these moving averages catch up and we see what prices do, or they can retrace back to the convergence, which is a type 2 convergence, like we saw in silver. And if it doesn't, if it holds, that means it's going to go higher, and I'd probably buy that dip and turn short-term bullish. But if it breaks through on the downside, um, that means the next leg down has started most likely. And so we're kind of getting to the tipping point here. Anyway, short term, we're going to get some sort of a change here soon. So I'm reiterating my buy. I wouldn't pay too much attention. This is what's triggering me to reiterate my buy, my shorting the S&P 500 is this convergence. It's a good time because most likely prices aren't going to shoot out of a cannon when these lines touch. But I would really stay focused on this. This is bigger picture. And if prices can't get through there, we're going to probably see a new low, and I want to definitely make money on that. So I'm also just showing you the Qs. Those are the large cap technology NASDAQ. You know, it's Apple, it's Google, it's Amazon, it's you know, probably Netflix, all those stocks. And so you can see these lines are touching now. So you know, I think we're kind of getting to a reckoning point here, and we'll see what happens. So I'm not suggesting buying the Qs, but I'm saying that while the S&P on a short-term basis hasn't had the conversion yet, we have on the Qs. So um, thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. What all that meant is that I'm reiterating my bearish rating on the S&P 500. Please like and subscribe. Tell your friends and family. Have a great day. Good trading to you.